Ni hao, and good morning to all participants of our webinar today. It's the second time for this year, and we are extremely interested in getting the news from China. Welcome to the Sino-German-Center at Frankfurt School of Finance and Business. Our topic is the upcoming 14th National People's Congress and its impact in whatever directions. Impact, of course, mainly on finance and economics. Our keynote speaker is Jörg Wuttke, President of the European Union Chamber of Commerce, and we are very happy, Mr. Wuttke, to have you again. You are the highlight for the Sino-German-Center, of course. Horst Löchel, my partner here and co-chairman, will do a short introduction into the topic from our side, and then we'll listen to you for 20, 25, 30 minutes, and then we have, as always, question and answer, and strictly at 12 our time, we will stop this webinar. Go ahead, Horst.
Yeah, thank you very much, Rüdiger, for the nice introduction. Also, a warm welcome from my side, all of you, especially, of course, for Jörg Wuttke in Beijing. We're talking about the National People's Congress officially, or this is also named as the two sessions, because it's not only the National People Congress, but it's also the Chinese People Political Consultative Conference here involved. And of course, most important is the reshuffle of the top government jobs, including the premier and of course also Xi Jinping to secure a third term as a president. Maybe I should also mention the event will start on March 4th and it takes only place every 5 years. So it's very, very much important, especially of course, for the economic direction of the economy. For the economic background, most of you know, of course, that there's a variety of challenges in short and long term in Chinese economy. They are still on their way to recover from the exit from the COVID policy. There are still bubbles in the real estate sector. Consumption growth is rather slow, and also the mood of the consumers are not really high. And whether the world economy will be a driving force for China in the current year has to be seen. And of course, also the long-term challenges. We have a variety of long-term challenges. The press was full of articles about the shrinking population and the declining aging working force here in China. So in terms of population, probably India this or next year will take over in absolute size. China also productivity is an issue. And of course, last but not least, geopolitical as well as geo-economic fragmentation. The key word is here the China-US tech decoupling. The IMF just released a report, a country report of China, and make an interesting note. And the note was, without further deep reforms in the direction to the market economy, there is the danger that the production potential, that means the maximum output of China, could decline to a growth rate to 3 to 4%. And not what is really possible, 5%. So that means the meeting matters very much, whether we can see there is a reform intention for the government leadership in China. Actually, we already have a statement in front, party statement, the important party statement. Also, Xi Jinping gave a speech here, very much quoted, especially in the Chinese press. Catchwords are here: new development, and new development philosophy means basically high quality development. But most interesting for me, and I'm sure Jörg Wuttke will also talk on that, is that Xi Jinping stressed that there will be a strong or forceful, he said, a restructuring plan, especially for finance and technology. For technology, this is more or less clear. For finance, a little bit a new story. We have to see what does it mean. I don't know, fighting the bubbles or reforming more, opening up the financial sector could be also a possibility here. However, President Xi also stressed, let's say, the leadership of the party again. also over the economy and the private sector, and we have to see what does this mean as stress, especially the leadership in technological development. Yeah, this is the background from my side. So I hand over to Jörg Wuttke. So, Mr. Wuttke, the floor is yours. Please go ahead.
The screen.
Well, thank you very much, gentlemen. It's a pleasure to be again here, Radio Beijing, for you guys. It's wonderful to be virtually, and I hope one day I'll make it actually to Frankfurt. I was in January, the first time in Germany in about 3 years, and it was wonderful to see three-dimensional people and not to have to unmute myself every minute or so. Well, this big session starts on Saturday. We already now have sort of some feel about it, because I was stuck in a traffic jam this morning as they blocked the road for NPC delegates, and we will have that for the entirety of 2 to 3 weeks. It's going to be interesting time, highly charged, and at the end of it, not only do we have 2 sessions, I think many of us, we have our CEOs coming in for the China Development Forum, which is the couple of days later, and it will certainly be the big show in town in order to, for the first time, see the new government meeting new faces, new CEOs. Most of the CEOs and top leaders of multinationals have not been in China for 1,000 days, and of course that means they will be cautiously trying to get a feel of where China is heading. So the 2 sessions are extremely important, not only as usual that they're setting the stage for 2023, but as a matter of fact, they're setting the stage for the next 5 years. We have a new prime minister coming in, we have a new lineup of a team coming in, and again, it's sort of reconnecting with the world that will happen. So these next 2 weeks, 3 weeks will set the stage on how the world will view China, how the world will actually see China for once beyond Ukraine, and Xi Jinping visit to Russia sees the world in what we actually used to be accustomed to, the economy first and foremost. So what are the 2 sessions all about? Well, setting, of course, the major economic targets for 2023, then approve a government restructuring plan, then appoint top government officials, pass major new legislation, and decide the legislative agenda for 2023, so to know what's in the pipeline. So let's have a look at all of this. Now, first and foremost, again, it is what will the GDP target growth be for 2023, and sort of an indicator for the future. Well, it was an incredible day today here in Beijing, because we had in the morning AmCham doing their survey and launching that. And in the afternoon, we had the Purchasing Manager Index coming out from the National Bureau of Statistics, which covers across China more SOEs, whereas then we also have Caixin, the PMI coming out. That's more private enterprise along the coastal area. So always interesting, a little bit divergent, but gives you a great feel about what did our guys say, meaning business partners say, last 2 weeks. So AmCham was incredibly pessimistic, and the survey was done a while ago. So maybe it also depends when you come out of this COVID stress that maybe you're less optimistic about it. It was in essence that the estimated performance results for 2022 showed a decline in revenues and an increase. Surprise, surprise, COVID was to be blamed for that one. But the real data set was interesting, that 45% of their members noted that China's investment environment is deteriorating, 45%. That used to be 14% from a year ago, and the highest percentage of members to respond this way in the last 5 years. So we really reached bottom in this respect from the AmCham point of view. And then despite growing pessimism, still China remains important in some areas. Now, the interesting thing is, by the way, our survey will come out in June. So you still have to wait what Europeans think about China. But AmCham made it very clear this morning, like us, their members are not relocating. We are not leaving China. But at the same time, AmCham and European Chamber, and that's their survey, and our gut feeling is we see that members are going to other places for new investment, new ideas. So China inadvertently has created new competitors for their own investment climate. I come to this in a second. Come back to data set. Now, 50% of the members are pessimistic about the future of US-China relations, surprise, surprise, and 3/4 of members report that their companies have been impacted by the trade tensions. Now, I'm pretty sure EU-China companies will not be having this kind of data set, but we of course worry about upcoming populism in China reflecting itself in populism in Europe, as well as that we are getting caught between a rock and a hard place between China's self-reliance attempt as well as the US IRA, but that's another session for you in Frankfurt maybe. So 65% of AmCham members say they are unsure or uncertain if China will open up further to foreign investment. Now that's a worrisome data set, and I fully think that our members will come up with the same, because we have been exposed to this kind of Sunday speeches. We call it promise fatigue. It's another Davos, it's another Boao speech, and nothing happened. So it is something that AmCham feels the same. And then 50% of AmCham members feel they're less welcome. Now, China needs foreign direct investment. I'll come to the data set in a minute. And it's worrisome that actually nothing really seems to happen. Now, that is American companies looking at China. Now, let's have a look at what Chinese companies are telling us about next month, or the next months with an S at the end. Well, PMI came out. It was pretty lousy in December. It was creeping back slowly in January, and I really have full faith in the data set. It's not made up. And now we come for the National Bureau of Statistics, meaning the SOEs across China, from 50 to 52.6. So we're expanding. It's optimism there. In the service sector, it's actually more pronounced. We come from 50-something, 54, I guess, to 56.3. So in a way, in the service sector, you see the most robust, visible recovery of the Chinese economy. People can go to restaurants again. They can travel. We had Chinese New Year. We have planes flying up and down. We have ticketing prices going up between Shanghai and Beijing 4 times the price. We have restaurants fully open and so forth. I was just traveling through China. You can see that China, when it comes to service sector, is gradually coming back. Those that are still left standing, I mean, there are lots of mom and pop shops in the service sector that went belly up. So we have to look into this space later when we discuss unemployment. And Caixin was equally not as positive as NBS, but still 51.6 is an expansionary territory, coming up from 49.2 in January. So again, January was pessimistic, February is slightly optimistic. So in a way, that's really, really good news to see. But again, this year, we'll see a very divergent story. Again, manufacturing will be limping along, but coming back, I guess, in the second and third quarter. We had a miserable first quarter for the car industry because everybody was front-loading purchasing of cars in October, November, December, as subsidies fell off. So it will take a while in order to get back there. But in service sector, it's good. So I think we easily, as you pointed out, Horst, we easily passed 5% this year because also the base was so lousy last year. So 5% should be the most rational, but I would also not exclude GDP growth of 6% for the end of this year. So what's going to happen there? Do we experience a comeback story like Wuhan in the summer of 2020? Certainly not, because China has a bigger debt burden, and China has basically a fiscal problem. To give you a taste of that, China spent as much on testing last year as the GDP of Iran, a cool $230 billion. Now that money is down the drain and not available in order to kickstart it. Many localities are really challenged on this one. Looking into this fiscal situation of localities, 17 out of 31 provinces or cities have a funding squeeze. We have a borrowing that is 120% of income in 17 of 31 of these provinces. 17 of 31. That is definitely not what the Ministry of Finance wants to see. Rhodium was investigating that, and they looked at 319 regions and cities in more detail, and they found 109 of them struggle to pay interest, let alone the initial repaying the initial loan. In 109 of 39 that struggle, 109 or 319 that struggle, we have more than 10% of spending in these cities or regions on interest payment, 10%. Now, the worst, you wouldn't believe it, the worst city is actually one of my favorite cities in China, is Tianjin. I was just in Tianjin 2 weeks ago. I met the vice mayor and the members. Now, Tianjin has basically 30% of their spending on interest. And you can see this. There was an interesting article in The Economist about the situation of the spectacular high rise as well as on Tianjin. But also, it is clear that the city is struggling. A city of 14 million people, after all, has seen an exodus in the public data, exodus of 1.7 million people leaving Tianjin. Now, you would expect people to leave Liaoning and Jilin and Heilongjiang, that's an old story, or going to Guangdong province. But you see a city which is so close to Beijing and so dominant in the regions, losing 1.7 million people over the last years out of 14 million. I mean, that tells the story. So in a way, we have to see how they recuperate and how much the central government is willing in order to fork them out. And that's also where we are with your financial situation that you alluded to. So it will be a good target. It will be 5% and it should be achievable. But again, how do we get there? So before you turn totally depressed about this outlook, but let me also remind you that as a matter of fact, 3% growth in China is already quite significant. If China grows 3%, it adds the size of the GDP of Australia, one-time Australian economy, to the equation. So even if China slows down, as it will, we still have quite a chunk. And McKinsey, the ever-optimistic McKinsey, of course, they calculated that if China grows 2% in the next 10 years, then in essence, it will have added in 10 years the whole GDP of India as of last year. Because, of course, that is sort of a race going on, which is in a way interesting, because certainly India will not grow by 2%, but much, much faster. So India will catch up with China, certainly. But just to give you a size feeling, 2% growth, 10 years, China adds one time India to the equation. Second question, how extensive will the state restructuring be? Well, we have a history here. The most spectacular restructuring was under Zhou Ji in 1998. We had quite a serious one also in 2018. So I guess with the 2 sessions, it will be minor. There will be something of a supervisory commission, and we just have to watch that space. So watch the news on March 13th. You might get smarter out of this. But one thing is clear, and again, I think Horst has alluded to this one, there will be a stronger party smell to it. There will be stronger party engagement on top of the government. So that has been the trend line over the last years. I'm not sure this is good news for the State Council, but certainly the party will overlook and look at the State Council much, much closer than before. Third question, who will be the key economic portfolio drivers? Who will oversee the new ministries and the State Council? Who are these fellows? Well, you have to wait until March 18, 19. So what I tell you now is all rumors and just a layman's view on this one. We have an unusual situation because Li Keqiang, the outgoing prime minister, has not been in the Politburo since late October. That is unprecedented. We have not seen the prime minister, as well as not the vice premier, Hu Zhonghua, sitting at the big boys' table. They have been kicked out unceremoniously at the spectacular party congress in October. Of course, the highlight there was Hu Jintao's demise in front of the world media. So Li Keqiang is gone, but again, Hu Zhonghua is gone. And then we have our favorite politician and technocrat Liu He. Someone we have great respect for him. He's going to retire. Then we have the financial regulator, Mr. Guo Shuqing, who has a very strong background in reforms. We have central banker Yi Gang leaving. And so all that have a taste of engagement with foreign business, that understand us, sometimes even speak English and speak our languages, but also they have a history of liberalizing against strong headwinds, meaning not economic headwinds, interest groups trying to derail these ideas these gentlemen have of opening up. And they have a strong taste for de-risk. They actually, in particular, Liu He managed in order to actually stop this onslaught of debt increase that was burdening the economy. And we have to give credit to these gentlemen in order to actually achieve that. So there's a whole bunch of people that is being replaced by people we hardly know. We have a new prime minister, Li Qiang. So in a way, it's just one character missing in the name. So Li Qiang will be the number 2 in the system. He will be a much stronger number 2 than Li Qiang ever was, because he's a confidant of the president, and I guess that he will have in many ways far more firepower than Liu He or Li Qiang in many ways had. He is a man with a good instinct. He has, for example, introduced biotech into Shanghai when he was party secretary. Unfortunately, he was derailed by Beijing, that actually emphasized the fact, well, BioNTech is German, it's a foreign vaccine, even produced in Shanghai, it still is foreign, and we want to have our showcase success story of Chinese vaccine. So in a way, BioNTech never made it across from the German embassy in many ways. Second, we had him introducing Tesla. That's a major achievement, introducing Tesla as a 100% investment into Shanghai, opened the supply chains, improved the supply chains. And if you look into the data set of Germany, for example, 20% of EV vehicles sold in the German shops is from China, made in China. The car industry from China is exporting to Germany. And the majority of that is Tesla. I guess that's intermediate, because Tesla will start producing in Brandenburg at one stage, but 20% of the cars on EV cars in Germany are from China, and I'm sure very fast it will be a third or even half. So fasten your seatbelt to stay in the slow things. So the new gentlemen, will they actually be able to have a major say in opening up the economy, the new team? Well, in the AmCham is very negative about it. We don't have a data set, are just very cautious. We had our position paper coming out in September last year. The headline was "Ideology Trumps the Economy." A little did we know that it was proven to an incredible extent in December, when the ideological zero tolerance on COVID was actually swept aside and just let it rip through the country. The zero tolerance was, of course, the major problem for the economy. So we have to see if the economic sense comes back to this country. That's something that used to be the strong point here. And we don't know if that's going to happen. Position paper, just a side remark, I always get asked by the leadership now, what can we do for European business? And I said, please do me a favor, don't ask me, just read. Read our position paper. September, 430 pages, 967 recommendations in great detail. Our 35 working groups went through all the trouble to actually really narrow it down and make it digestible for the respective decision makers and ministries to go for it. I said, just read it and make it as a tick-off box. And at the end, maybe in September, when my successor is going to have the position paper out, then maybe it's not 430 pages, but 200 pages, or not 1,000 recommendations, but 500. So that would really indicate that China is walking the talk and not just peppering us with very well-meant Sunday speeches. So what was going to happen again on the ministry side? Well, we have a new NDRC minister, finance again, possibly a minister of science technologies, again, the central banker, maybe a CITIC chairman, Mr. Hu. We possibly might see something new at Minister of Commerce. I might make a little commercial here. Minister of Commerce has been fantastic support of our European business over the last 3 years. In particular, the two Wangs, the Minister Wang Tao, as well as Wang Shouwen, and maybe they move to respective positions. I don't know where, but I must say that in all of this misery we had particular two organizations that were always there, MOFCOM and CCPIT, which is very affiliated with MOFCOM. So in a way, that's the who's going to be in there. Now, will the new prime minister address the concerns of foreign business? I mean, that's what you and me are mostly interested. Well, we expect something out on March 20th, when the NPC is closing and the new prime minister gives his big policy speech. Again, we hope that he will look at my position paper, he will look at the AmCham white paper to get inspired of actually where we think we have reform potential, because they need it. FDI went down like crazy. we had European investment into China in the first half of last year going down by 70%. Well, publicly, it looks like actually it was increasing in the first half of 2022 because of one deal, BMW 3.9 billion in Shenyang buying out their partner. Well, that deal was basically been cooked up 3 years ago and put in the freezer because they wanted 3 years to see how things are developing. And of course, Liaoning needs BMW, BMW needs Shenyang, and so it went out 3.9. But what was the total figure? It was 5.5 billion. So if you deduct that, you can see it's just 1.6, 1.7 done by all the other 1,000 companies. And how little is that? So in a way, we have seen a decline of 70%, and already the storyline was not good beforehand, because on average over the last 10 years, Europe invested in China about $8 to $9 billion euro, whereas China invested in Europe on average between 11 and 13 billion euro, so bigger than we engaged ourselves. And just in order to give you a little taste of how we do with the United States, we invested as European business in 2021, $160 billion into the United States, whereas we on average do 8 to 10 billion in China or per year. How is that possible? Well, in the US, it's all about acquisitions. You buy a company, it's a big figure. It's all about greenfield technologies here. It's $1 billion there, 100, 200 million. And again, BMW was the outlier, indicating that if China would open up to acquisitions, they would get the big figures. As they've proven with Stellantis recently, they don't want the big figures. They want apparently small steps, and that's not good enough, I would say. So the data set July to December that MOFCOM has announced yesterday actually indicate that FDI really took a hit. Now, the FDI data for MOFCOM is difficult to assess because we assume that 70 to 80% of the data set is sort of Chinese return money, because the big investors are Cayman Islands, Samoa, British Virgin Islands, Hong Kong and Singapore, of course, whereas the European Union on average is always somewhere between 3 and 4%. European Union companies in China, 3 to 4%. Americans actually less. So in a way, let's look at this data set from MOFCOM as a whole, and you can see from their data set that including the Chinese investors, it went down by 73%. So second half last year, FDI in China, 73% down, the biggest drop they had since 1999. And Chinese investment into outside China, OFDI, as we might call it, went up 21%. So the rest of the world was so much more interesting for Chinese companies than China was for foreign companies, and even Chinese companies doing return, something to ponder. And again, the data set is quite amazing. It is the biggest gap we have ever seen, and that's MOFCOM data. Next point, and I'm coming to the end, is of course, will the new legislation be interesting for us? Well, as a matter of fact, the new legislation law that has been worked out will be dealt with at the 2 sessions. It will give lower level governments more authority to legislate in certain areas, including concerning environmental protection. So it's a good thing, I would say. The law will likely usher in more robust mechanisms. Again, it's a good thing in order to have national legislation to be handled in local legislation, more coordination, which we have been asking for quite a while. So what is the other topic, question number 6? How will the legislative agenda affect the operation environment in 2023? Frankly speaking, we don't know because it's not there yet. We have to see what's in there. We have, of course, seen recently a lot of laws impacting foreign business, such as securities law, personal information protection law, data security law, and. So we have to see to what extent China comes and cooks up something which is even more impactful to us. Last point, and of course, for many of you climate change interested people, how will carbon technology, how will carbon policy look like? Well, after this drama of last summer, these huge temperatures across China, where we had blackouts, we didn't have enough energy, renewables were impacted by a drought, not enough water in hydro, not enough wind and so forth. China has now resorted to building again coal-fired power stations, and they have basically approved in 2022 one time the entire UK coal fleet in one go. And they're building this, 105 gigawatt, 50 under construction. So China stands for more, 4 times more coal-fired power station construction undergoing right now than the rest of the world combined. So, you know, is the ecology going to be a victim of the economy, or would the economy be trumping the ecology? I'm afraid it might be. So 2030 peak might actually be still possible, but 2060 will be even more challenging. Again, we had a report out in May last year, which indicated that we are part of the story. We want to grow with this, but boy, the headwinds are strong. And with this, Horst, I'm stopping here.